Hi guys, Krios here. Today's video, I'm going to teach you how to take high probability trades using my trade as a real life example. So you know that I actually take the trades that I dissect here. I even have a video journal of me and it lasted around 5 hours. So it's quite long. Alright, so in this trade dissection, I won't withhold any information. I'm going to tell you everything I saw, everything I need to take a trade, and hopefully you can apply it to your own trades as well. So let's get started, right? Now, in high probability trades, there is prime emphasis on consulting the higher time frame for direction, for bias. It will help you frame your trades in a way that you aren't just blindly looking for your entry models in the lower time frame. So what did I see here, right? So in last time stream, I forgot when I streamed that, I was looking at this weekly supply, right? So this weekly supply, I felt like it can give some sort of resistance, or at least a catalyst for Bitcoin to retrace, right? Which we can see that it happened, right? So this was the primary idea of being bearish as price goes up, right? If you recall, during this time, most people were very bullish as Bitcoin breached 30,000, right? People were longing the breakout, right? And what happened? Those people became exit liquidity for the shorts, right? So now, let's check how I actually took the trade. So after the weekly, we go to daily. So in TradingView, you can use a shortcut. So you just type 1D to go to the daily time frame. So this is the weekly supply I was talking about, right? So in the daily, what was I seeing? So let's zoom out a little bit, right? What do we see here? We see some sort of bullish structure, right? Bullish structure. And prices don't just go up vertically, right? We always have an impulse followed by some sort of correction, or you can call it magnitude or duration, or whatever terminology you might prefer to use. But here, I was expecting, if ever there's gonna be a correction, it's most likely gonna come from this weekly supply over here, right? So what was my bias? We're in a bullish market structure, right? As evidenced by the impulse, correction, impulse. Now I'm trying to look to play the correction. So now that's my market structure. So what do? First step, we want to mark the premium and discount. So how do we do that? We take this Fibonacci tool, we mark it from the low and then towards the high, right? So in this case, my colors are baliktad. So here. For those who are new, this point is just a 0.5. So anything below 0.5 is discount. Anything above 0.5 is premium. Now, generally, we would want to sell things in a premium and we want to buy stuff in a discount, right? Generally, there are some exceptions to when we might be able to look for long setups in premium and vice versa, right? But that's a topic for another day. So now here, our bias is that the price will hit discount as it retraces, right? So we are in premium and we're trying to short. That's already one confluence. So now when precious here, where is it likely to go to, right? Likely, it doesn't mean it's gonna go to there or it doesn't have to go there. So I identified this swing point, right? So this is my draw on liquidity, right? So I believe that lots of stop losses are here and thus wanted to short towards there, right? I'm not trying to capture the entire move towards there, but a fraction of the move going there, right? So that's my... What else can we identify in the daily chart? This daily supply level, right? And then what else? We have demand just below the equilibrium, right? So essentially, one of these two is gonna be the destination of price, right? Price may first come up here before going down, or price may first come down first before giving a reaction. Whatever happens, since we have a bearish bias, we're gonna look to short first. So that's it for the daily analysis, right? Next up, I'm gonna check the 1 hour. You can check the 1 hour. That depends on you. Sometimes I check both. Sometimes I check the 1 hour only, or sometimes I check the 4 hour only, right? So here we are. So again, what's the protocol? Mark structure, right? And we can see that we have a bearish structure, Again, if you remember what I told you a while ago, impulse, correction, impulse, correction, impulse. So we were wanting to get short. Now since the price action concepts that we study are fractal in nature, you can apply the same premium and discount here. Right? So yeah, from high to low. So anything above here is likely to sell. So price hit premium. Right? Now here, most people don't apply this in their trading, but me and my students are very fond of it. So we take a fair value gap and we wait for a raid. Right? So that signals that it's time for a bearish momentum to start kicking in again. Right? So here we have 1 hour bearish structure break. So I think this can be your structure or this, whatever. It retraced. There's a change of character here, right? So this is a change of character. Go back to a fair value gap. Raid instead of fair value gap. Then we have loss of confluence telling us we might see a down move. Right? So I think in this trade I targeted this, but I'm not sure. So this is the possible swing low that price can gravitate towards. Because remember, markets are a function of liquidity, right? So now let's go lower. Let's go to the M15 time frame. So this is the fair value gap of the 1 hour and this is the raid. So what did I see in the M15? I saw a bearish structure break, right? This is a bearish structure break. This here, right? And this is the bearish change of character. Right? So now we're definitely bearish. The structure shifted from bullish to bearish. So we're waiting to again play the retracement, right? Because the way we trade price action is we want to get in the retracements, the pullbacks, right? So that's what we're trying to do here. You get short here. Now where's our target? This swing low. Because if you all know, that's gonna be a quote-unquote weak low, right? So what was my execution time frame here? So I actually executed a bit lower than M15, right? So again, type 5, then M. So never mind, you just type 5 for 5 minutes, sorry. So here we go, right? So this is the M5, right? And you know me, I've always used change of character as my entry criterion, right? So if you can see that, this is the M5 change of character. Now, you'd ask me, did I enter here in the supply? Nope, I did not, right? I did not. How did I enter? I use the M5 chalk block, right? So I take the entire low to high and that's gonna be my entry. This is essentially my entry, right? So this is a decent how many hours is this? This is a decent 3.05 hour, right? So this is the first entry. So was it hard? We essentially went from having a bearish weekly bias, spotting that the daily might go down because of counter-trend nature and price. We dug and deeper in the 1 hour to see an FVG getting raided, right? And we go to the M15 to see a bearish structure break. And everything is aligned, right? Everything is in sync. That's pretty good for us, right? Okay. So here, the entry was pretty simple. Once price broke that low, put a limit on the chalk block. Top above the high, target the weak low. Right? Now, you might ask me, the price was so near my target. Did I change did I move myself to break even? No. Right? If you know me, most of the time, I would not move my stop to break even. Right? There's pros and cons to this, and ultimately that's gonna be up to you, right? Up to your personality, up to your emotional maturity, and up to your stats, right? Most importantly. So here, actually, I was watching this, right? I was watching this price because I was trying to look for another entry. Why did I find another entry, right? So in the M5, we know that the structure here is still bullish, right? I mean, I guess you can range and then bullish, right? So this was a very important zone, right? I wanted that to hold. I mean, I wanted that to not hold. I mean, because if that held, then price would have went higher, right? But it broke. But before it broke, it gave a reaction, and you all know that this is a flip zone, right? So let me draw that for you real quick. So this is the demand zone, or whatever you want to call it, right? And then this is the reaction of it. Now, normally, most people here, would blindly put a limit there, right? Blindly put a limit there, target that, right? Easy 2.61R, right? But not me. Before this happened, mind you, I already had an expectation, meaning I was actually actively waiting for it, right? It's not bara or like, this looks good. No, I was waiting for one specific condition to be fulfilled. And that is sweeping this equal highs. And we get that sweep here. So, there's a difference between seeing something play and then entering versus expecting something to play out, seeing it play, and then entering. So, obviously, I was expecting this to get swept. And if it did get swept, what did I do? Obviously, enter, right? You need to execute without hesitation. Because otherwise, you will miss a lot of moves, right? Or you'll not stick to your trading plan. Now, I'm trading in the M5, right? There's a bit more wiggle room to decide, to calculate risk, and whatever, right? But if you're trading the lower time frames, which I don't recommend for beginners to do, you'll get really swamped with lots of decisions that you have to do in a very short period of time, right? So the M5, it was simple. Wait for the sweep, enter. No sweep. Stop just above that. Now, some people might enter this very differently. They might enter on close, stop, above the candle, right? Now, this is wrong in terms of how I'm managing the trade. Why? Because I have an existing trade idea. Is my trade idea invalidated when price hits above this high? No, right? Because the overall structure is still bearish here, right? Does price magically get bullish here? No, it only gets bullish when we break this. We stick bearish, right? So most people over glorify setting tight stops. Right now, I take trades with tight stops. I take trades with wider stops, right? There are different scenarios and situations where I would use them, right? And as a beginner, you're better off taking trades with wider stops. So I don't fall prey into this high R scheme that most people are pushing, right? So that's it. Now, as you can see, right, I enter and immediately get hit with drawdown. Right? So you might be wondering, what was I thinking? What was I doing, right? So again, I was recording this entire trade and I was narrating over this, right? I don't want to play my footage because that's personal. But like when I was seeing this, I was in a very, very calm state. Why? Because I had an expectation. I know that there's a higher chance my idea plays out. If it doesn't, then fine. Right? I know my risk is managed. I know that if I lose this trade, I won't get liquidated. I know if I lose this trade, I have more chances in the future to get back what I lost. Right? So this was a pretty much hands-off trade. I did not, move stops, move targets. It was pretty much set in stone. Right? So there. We get a bit of drawdown around 4 candles worth of draw. Oh, never mind. I don't know, but some sort of few candles of drawdown, and then eventually price nuked, right? So these are two different entry types. So one is the change of character. I mean, technically it's a change of character block. The second one is a sweep entry, right? But these do not matter, right? Most people, want to memorize or practice or looking for a holy grail entry model, but these do not exist, right? This idea worked because of the analysis behind them. Because there are an infinite amount of ways you could enter a trade with a bearish bias. Okay? So let's just give you an example, right? An example of how to enter this trade. For example, you have a bearish bias. Enter on F15 chalk. Enter here, stop here, target with the expectation that this strong low will be broken. Now, that depends on you, right? Or you can possibly put a limit on the fair value gap EQ, right? So, wala yan sa entry mode, okay? It's always analysis. Let me just put that up so people understand. It's always analysis. Gagawin ng entry, right? I teach my students to put primary emphasis on analysis, okay? Because even if we don't use price action to enter the trade, for example, we use an indicator, like the way I teach how to enter using an indicator, you will have caught this trade, right? So that's it. I hope you learned a lot. I'm gonna try to put some screenshots in the edit where I actually enter the trade, or maybe I'm gonna play the video for you right now. It's 5 hours long, so I'm gonna speed it up very, very quickly. But know that I actually did enter, and this is on BitGet. So this is the first entry I took. You can see I entered on the chalk block. That's a limit, stops above the high, and targeting on that low. This is the second entry. So you can see that my average got brought down, and price eventually nuked very, very quickly. We will see that in a while. After chopping on my entry, price just decides to go to target in 3, 2, 1, drop. Now, if you guys want to trade crypto, I can recommend trading in BitGet because you get 20% discount on your fees, and you have bonuses, and you have lots of trading campaigns. Alright, that's all from me for now. I hope that you learn more about these concepts, seeing it in action with actual trades and not just some hypothetical lipstick chart. And hopefully you get to apply these concepts and level up your trading career slowly, little by little. If you like this video, hopefully you can like and subscribe to my YouTube channel. I'm gonna try to make more videos about my trades and hopefully educate people so that they don't have to, buy a mentorship that's not that good. Because let's face it, most of the information is really on the internet for free. Alright, Kreios out.